You see a credit card with a great sign-up bonus. You apply. Denied. You think, maybe that bank is just tough, so you try another one. Denied. You panic and try for a loan to consolidate debt. Denied. Suddenly, your score has dropped 40 points, and you haven't even spent $1. You have just fallen into the inquiry trap. In the world of credit, there are two ways people look at your history. One is like a friendly wave, and the other is like an interrogation. Knowing the difference between a hard inquiry and a soft inquiry is the difference between an 800 credit score and being rejected for an apartment. In this video, I'm not just going to tell you the difference. I'm going to show you the shopping around loophole that saves you points, the specific gray areas like rent and cell phones, and finally, the step-by-step method to dispute and remove unauthorized hard inquiries from your report. The soft pull, the friendly wave. Let's start with the good news. The soft pull. Think of a soft pull, or soft inquiry, as a background check. It's like looking at your own reflection in the mirror. Soft pulls happen when a person or company checks your credit report just to get information, not to make a lending decision. The most common example? You checking your own score. I see this comment all the time. If I check my credit on Credit Karma or my banking app every day, will my score go down? The answer is absolutely no. You can check your own credit 1,000 times a day. It is a soft pull. It is invisible to lenders. Another common soft pull is the pre-approval or pre-qualification. You know those annoying letters you get in the mail saying, "You're pre-selected for this card." That means the bank did a soft pull on you. They peeked at your file, saw you met their basic criteria, and sent the letter. This does not hurt your score. Other soft pulls include employer background checks, insurance companies giving you a quote, existing creditors doing an account review to see if they should raise or lower your limit. The bottom line, soft pulls are for information only. They do not affect your FICO score. The hard pull, the interrogation. Now, let's talk about the bad guy, the hard pull. If a soft pull is a background check, a hard pull is an application for money. A hard inquiry happens when you specifically ask a lender to lend you money. You are saying, "I want a loan," or "I want this credit card." Because you are asking for debt, the lender needs to do a deep dive into your history to assess risk. So, how much does it actually hurt? Typically, a single hard inquiry will drop your FICO score by 3 to 5 points. Now, you might be thinking, 5 points? That's nothing. And you'd be right, if you only did it once. The danger isn't the points. It's the velocity. If you apply for 5 credit cards in 1 week, you lose 25 points. But worse than the point drop, you look desperate. To a bank, someone asking for a lot of credit in a short time looks like someone who lost their job and is trying to pay bills with credit. That is a massive red flag. Here is the timeline you need to memorize. A hard inquiry stays on your report for 24 months, 2 years. However, it only affects your FICO score for 12 months, 1 year. After 1 year, the inquiry is still visible, but the scoring algorithm ignores it. The gray areas, rent, utilities, and increases. This is where people get confused. There are some actions that feel like they shouldn't be hard pulls, but they are. Let's bust some myths. Myth number 1. Renting an apartment. When a landlord checks your credit, is it hard or soft? Usually, it is a hard pull. If you are apartment hunting in a competitive city like New York or Los Angeles and you apply to 5 different buildings, you might get hit with 5 hard inquiries. Always ask the property manager if they can accept a soft pull report from a third-party service instead. Myth number 2. Cell phone plans. Opening a new postpaid plan with Verizon, T-Mobile, or AT&T. That is a hard pull. You are technically borrowing a $1,000 phone and paying it off monthly. That is a debt obligation. Myth number 3. Credit limit increases. This is the trickiest one. You call your bank and say, I want to raise my limit from $5,000 to $10,000. Some banks, like Amex or Capital One, can often do this with a soft pull. Others, like Chase or Wells Fargo, might require a hard pull. But be careful. Always ask the representative on the phone, will this be a hard pull or a soft pull? If they say hard pull, it's usually not worth the 5-point drop just to get a higher limit. The shopping around loophole. I have good news. There is a secret buffer zone built into the FICO algorithm that protects you when you are buying a car or a house. Let's say you are buying a car. You go to the dealership, and they shotgun your application to 10 different banks to find the best rate. Suddenly, you see 10 hard inquiries on your report. Do you lose 50 points? No. FICO understands that rate shopping is smart financial behavior. If you apply for multiple auto loans or multiple mortgages within a specific window, typically 14 to 45 days depending on the scoring model, they are treated as one single inquiry for scoring purposes. Warning: this only works for the same type of loan. You cannot apply for a credit card, a car, and a house in the same week and expect them to bundle together. That will count as 3 separate hits. So, if you are shopping for a mortgage, do all your applications in a 2-week window to protect your score. How to remove hard inquiries. Now, for the advanced tactic. What if you have hard inquiries on your report that shouldn't be there? Or what if you were a victim of fraud? Disclaimer: I am not a lawyer. You should never dispute a legitimate inquiry that is attached to an open account you are currently using. That can get your account closed. Only dispute inquiries that are fraudulent, unauthorized, or not attached to an open account. Step 1. Identify the non-attached inquiries. Look at your report. Do you see an inquiry from a bank where you were denied? Or an inquiry from a car dealership you never visited? These are your targets. Step 2. Don't just click Dispute on Credit Karma. That rarely works for inquiries. You need to call the bureaus, Equifax, Experian, TransUnion, directly. When you call, the script is simple. Hello, I am reviewing my credit report and I see a hard inquiry. I did not authorize this inquiry, and I do not have an open account with this lender. Please remove this unauthorized inquiry from my file. Step 3. If they refuse, pro credit repairers use a secondary freeze method. They freeze their reports at smaller data exchanges like LexisNexis and SageStream before disputing. This makes it harder for the bureaus to verify the inquiry, increasing the chance they just delete it. So let's recap. Soft pulls are harmless background checks. Check your score as much as you want. Hard pulls happen when you ask for money and drop your score by 3 to 5 points. Rent and phones are usually hard pulls, so be careful. Use the 14-day window when shopping for cars or homes to bundle your inquiries. And finally, monitor your report. If you see an inquiry you didn't ask for, dispute it immediately. Now, help us giving like to this video and subscribe to receive and see more videos about managing your finances. Thanks for watching.